the short interest, the gamma squeeze, and FOMO buying, essentially the fear of missing out, right? So you've got a pretty decent amount of short interest, and these shares have been held for a very long time. In fact, 47 days is the average amount of time that any loan has been held on this stock, which means that the average short position is held at $10. They're down substantially, right? So there are some more shorts that can cover positions and run this up. Gamma squeezing, which is call options running from out the money to in the money, can cause the squeeze up effect as well, because market makers have to buy the underlying stock from the market, and that can drive price up. And then it's a momentum trade, right? You're going to bring in some day traders, some swing traders, some people who are looking at the stock and thinking, this is the hottest security in the market right now. I want to be a part of this. I want to make money on it. And those three factors drive into the momentum that has been what you've watched happen the last month.
It's just going to be a very volatile, violent move to the upside. And like, just to give some, like, I guess more of the quantitative numbers to it, what Trey just said, the people who have been betting on this, on average, have had those shares loaned out for 47 days, which means they got in, on average, around the $10 mark, which means they're down 500%. And to put a number on that, that's over $2 billion. I get it. We're dumb money. We don't know what we're doing, but then why are they the ones down $2 billion and we're the ones that our P&Ls are like insanely high?
If 70% of GameStop is trading through Citadel and Virtue, and they're also making markets on exchange, and they're the designated market maker on the NYSE, for example, they have a huge information advantage. And that kind of information advantage means that they have a lot of power to set the price of that stock. Now, it doesn't mean that they're affirmatively manipulating it. I'm not saying that, but it does mean that they have a lot of power and they can swing it, in all sorts of ways to help improve their profitability or change the quote at which they're then internalizing.
The real issue was there any fraudulent activity involved in the trading? Was there manipulative activity? Were, for example, individuals, encouraging buying, saying, hey, I'm in the stock, let's get on this for whatever reason, when they in fact are selling the stock. So I think those are the dynamics that the SEC is going to look at from an investigative perspective. When you framed the question originally, you were talking about regulation. I don't think you can regulate here because you really can't create multiple tiers of regulation or apply different metrics to these securities.
Shepard Smith here. Thanks for watching CNBC on YouTube.